Well, you know, order protection rule obviously is the big showstopper in the NMS space, and if members and the commission wanted us to propose it there, I think we would. I think when we looked over the comment letters from the last two iterations of this, it seemed like, you know, people asked for consolidated data, limit order display, and locking and crossing. And again, you know, we went back and got all three of those. So, but if people say they want order protection, and if the commission does, I think we could put it in. Obviously, it would require a lot of lead time and implementation time, but we thought this was kind of a good start.
I mean, it's a negotiated market at the end of the day, right? I mean, there's reasons to trade through in this space. If you need liquidity, you have to go to where the liquidity is. And I mean, when it comes to handling, you know, retail order flow, obviously you can't, you know, you have to protect the MBBO. But certainly we see situations where where, you know, where there's a bid, you know, a little below the bid that they know there's more liquidity at, and they just want to be done. They don't want to risk, you know, the guy that's, you know, maybe a bid slightly ahead for a minimum quantity to.
Yeah,
you know,
well, and that's why we didn't
run.
originally propose it. We thought that we saw that there's a lot.
I mean, it is definitely a different type of market, and you know, I think part of the problem with just kind of taking these NMS rules and putting them into this marketplace kind of on a wholesale basis is this is a different market, and it should be a different market. And if you know, as Cromwell alluded to earlier, if you look at kind of the bottom, you know, maybe 20% of stocks in the NMS world, they don't trade efficiently on super montage. I mean, we see 1,000 share orders take $2 stocks to $8. I mean, we have major problems with you know, erroneous filings and you know, these illiquid stocks trading in this super fast you know, order driven market. And you know, I think there has been some rumblings in the industry about slowing kind of those bottom tiers of NMS stocks, slowing the trading down and kind of moving these stocks even possibly out of the super montage environment and into a more you know, market maker, dealer driven, you know, whether it's, you know, SOs or super SOs or select net environment, whatever it may be. So I think kind of, you know, these, like the best of these stocks trade less than, you know, 500 times a day probably. You know, the highest quality names. Cromwell probably has the exact stats. But if you look at, you know, kind of the best names, you know, would definitely be the major foreign companies. I mean, they don't trade, you know, 20,000 times a day.
I think of like, where's the market going? The place of, you know, GM traded 29,000 times one day when it was delisted from the New York Stock Exchange. There's a whole cycle of things that were happening. There's the CDS, the default swap auctions were closed out, so there's a big short position that needed to be covered. There's the Chrysler news going to the Supreme Court. There was the realization the bankruptcy was going to take a little longer, so the stock went straight up. But it traded really efficiently. The market worked. I mean, it was, you know, this marketplace worked, and that's been, you know, our viewpoint has been, you know, we're not an ATS, we're not in the business of the execution. You know, Matt's a customer, Matt's firm's a customer, Barry's firm's a customer. And, you know, we don't get involved with the execution piece. We consolidate quotes, and we use, and then we provide an order delivery system. But, you know, in many ways, unlike a traditional view of what is an exchange, which used to be a building with columns in front of it, you know, we're a network. And, you know, our network, we built the functionality. I mean, we added PinkLink, you know, 7 years ago or so, and, you know, we had the quotes 10 years ago. But the marketplace developed not because of us adding more functionality. The marketplace developed like the internet did, that more endpoints used the transparency and the communication ability to develop their models around it, which is, I think, and that's kind of because the regulatory side always wants to look and say, okay, this is, you know, you've got this trade and you're the Pink Sheets marketplace, which we were when we were a phone book, and we're, you know, but we've made it more efficient for Knight to innovate, ARCA to innovate, and, you know, I see our job at Pink OTC Markets is really to work on issuer compliance and investor protection. Segment the market, drive more disclosure. That's the real place we can drive value. Bring high quality issuers into the marketplace. International securities, sub-NASDAQ issuers, that's, you know, this facility here is to drive issuers to come in to trade, make the pie bigger. On the side, though, of the trading side, it is, access fees are gonna change the market. I think the market's gonna be changed more by limit order display. I think when a retail order is being handled, the broker-dealer needs some discretion so that retail order doesn't get front-run. And it may be a little bit more than tier size, but it's not, if I've got 100,000 shares of a $10 stock on my books of a bunch of different retail investors, that I should show it all.